What is going on, everybody? Let me have a sip of coffee so we can talk about it. I forgot my background again. This is hilarious. Hold on. We got some music on at least, right? That is always a good thing. How you guys been? What is going on? You guys been coping with the whole situation, or what is going on? Let me put the backgrounds on. Oh, and then hope you guys are being optimistic because stock markets, guys. Stock markets. First of all, let me hear an applause. Okay. First of all, things are ready. The water is here. Things are ready. I've been running around like crazy, but we're good. I have my Hawaiian shirt on because I'm so done with this weather. Like I cannot tell you. I cannot tell you how done I am with this weather, boys and girls. So, if you are in Massachusetts, move out of Massachusetts. If you're thinking of coming to Massachusetts, maybe wait another good month or two and then come. Okay. And let me start recording my audio too. Hold on. Okay. So number one, I hope you guys can hear me. Let me know if you cannot hear me, because if you cannot hear me, we have some issues. So let's talk about the market a little bit, and then today I want to talk a little bit about life too. Okay. You see, when you get one dimensional, that is a bad thing, you know. When you get when you get one dimensional in one aspect of life, it's not a good thing. Okay. When you get focused on one specific side of life, like money or wealth or whatever, nobody focuses on happiness, but let's say accumulating wealth or accumulating stuff. Okay. It's dangerous. Okay. Now, if you want to be the best in the world, you have to do that. If you want to be one of the best in the world, you still have to do that. Okay. But you have to understand, all right? Money is not everything. And, it's funny that I choose to have this talk with you now that the stock market is a little bit down, but it's true. The truth is that, money is not everything. Okay. Now, we are going through a rough patch. I'm going to cut through and show you a few things. You guys take some notes. May 4th on Wednesday, we have the FOMC meeting. They're going to raise the interest rates. And now the question is, what's going to happen? Are they going to raise the interest rates by how much? Are they going to raise them by 0.5, by 0.75? That is one issue. Then we have Elon messing with everything about Twitter and stuff. And then we have the Berkshire Hathaway, which is Charlie Munger and Warren Buffett. We got these two guys that they taught us a thing or two over the weekend about Berkshire Hathaway. Now, first of all, let me show you this thing. This is on. All right, you guys can see that now. So as you can see here, this is the 10-year treasury yield. Okay. So this, all right, these adjusts. Let me shut this off. Okay. Now you can hear me better. So this adjusts pretty much everything. All right, as far as interest rates go. So, and then this is an indicator of fear. Now, this here is one story. Okay. I want to remind you a few things. And some people say, oh, we are done for good. This is it. Now, if I go up, it makes it smaller. If I go down, okay. Now, this is the 1 year. All right. You can go to year to date. What happened? Okay. Even more fear. You see, the more the fear, the more this skyrockets. And this affects interest rates. Okay. The 10-year treasury yield. And when people say the inversion of the curve, that's what they mean. The inversion between the 10-year and then the 2-year. Okay. Now, this affects everything that has to do with interest rates. It is an indicator of fear and all of other things. But what I want to show you, this is one picture here that we can see. But if you go to the 1 year, you see a different picture. If you go to the 5 year, though, this is the bigger picture here, boys and girls. Okay. So this is the truth right here. You see, we've seen this is what year is that? Let me see, 2019. We've seen 3. All right. 3.1 10-year treasury yields. So then we went through the pandemic and everything else, but the true story, okay, let me put my face up here too. The true story, all right, it is that this it's been very high in the past as well. Now, this you have to factor the fact in that this was through uh, um, Donald Trump being president. Okay, Donald Trump, what he did for the economy, he boosted the economy big time. Okay, you like him or not, many people have contradicting opinions. That's why I don't touch politics as well too much, but he boosted the economy. He said, "I get business, guys. That's my thing. I get how business works. Go out there and spend your money. Help businesses." He gave tax incentives. He wanted people, and like this is smart. That's how money circulates when people are not afraid to spend money because they believe they're gonna have more money. So he did that, and that helped a lot. Okay. So you would see back then, actually, you would see interest rates like, look at that, okay? You would see interest rates looking at 2.4. Then the peak was 10/28, 2018, which is October 28, 2018. We saw 3.1. Like this is nearby the peaks. So we're not even close to that, okay? We're 2.9. We're about to be 3, whatever. But the difference, like I said, is the economy back then was better. We had a better economy, a stronger economy. We had a lot of things going for us, all right? So now, the thing is that we are recovering. You know what is the sad part, to be honest with you? The very thing they were trying to avoid during coronavirus, they might have messed it up and caused it now. What I mean by that? What I mean by that is this. The very crash that everybody expected back in March of 2020 when Donald Trump, and let me pull the graph too, March of 2020. Let me do the S&P 500, if you guys know, it is the 500, the best 500 companies in the US, whatever. But if I pull this up anyway, all right, I'm going to do it on Google Finance, all right? Look at that. Let me bring this over here. All right. Yeah. So, okay. If you guys see this, I'm going to put this as the 5 years so we can see everything. Okay. So it's obvious big time where the crash happened when Donald Trump said we are officially in a pandemic, the Chinese virus and all this stuff. Okay. And he shut us down. So it's very, very obvious. Okay. Now, it's right here. You see it? We're at 337, and then 337 we closed February 7th, and then February 14th, and then February 21st we start rolling down. Another week, February 28th, we hear of a pandemic, and then this is where really bad things happen. So whoever bought here, as you can see, and I was one of them, you see, they got an amazing deal, 228.8 on a lot of companies. Now, what does this mean? This means that this thing that they tried to prevent back then, because what they actually tried to prevent is this thing not to go even down, like even further down. They came out and they said, Jerome Powell, let me tell you, all right? Jerome Powell came out and said, guys, we get what is happening. The Fed is for you. The Fed is with you. We're going to do everything we can in our power so the economy doesn't collapse. And they did. They put interest rates to zero. And as you saw, they printed a ton of money through monetary policy. And what you see what this did, exploded home renovations, exploded. First of all, people went out to buy a home because now it was cheaper to buy a home and pay mortgage because of a 2% or 3% interest rate than paying rent, $3,000, right? For a 2, 3, 4 family house, okay? I mean, a 4-bedroom. So what this did, like I said, is pushed, like everybody had no fear to spend money. Everybody was spending money. They stayed home, and like we said, there were pandemic plays. So you could buy Peloton at the time and make a lot of money because people were sitting home, they wanted to exercise. You could buy Zoom. You could have thought this way and then make a lot of money as a pandemic play. But anyway, regardless, the whole thing is the Fed came out and said, guys, we're with you, and don't worry, we're gonna do everything we can to make sure this economy is running. But this is an artificial pump, all right? And there is nothing wrong with that because that's the Fed's job, to keep the economy going. The Fed should be for the economy. So now the very thing they tried to prevent back then at this chart I showed you, which is a recession, they might cause it now. Like, it's unfortunate, but that's what happens when you have lag in data. And what is lag in data, or data, whatever, however you want to call it? It is that the data comes to you in a latency, and the later the data comes in, it's harder for you to pull, so they're in this situation where they've been giving a lot of leeway to the economy. So now for them it's time to tighten. All right, that's what they call. They try to tighten through the tools they have, by raising interest rates, by even just by talking about it, people tighten. You can see it because there's more fear. You can see because people don't. Where is all this? Side note, where is all this GME plays and all these GameStop to the moon and all these Shiba Inus and Dogecoin? All right, where is all this now? This year is baked, is done, like, because of the Fed. So anyway, so the very thing they try to prevent, that's my whole point, they might cause it now by raising the interest rates. Now, I understand, although they say they're two separate entities and the Fed is the Fed and then the government is the government, and I get that, but trust me, like, they are one and the same, right? And there is a reason they're separated, so this absolutely makes sense, and they should be. But come on, you know that they are all in the same table. Okay, so the whole thing here is either Joe Biden is putting some pressure on Jerome Powell and telling him, hey, you got to raise the interest rates. And I have a lot of faith in him. But the things I see, guys, I got to tell you, just like many investors, and that's what many investors do, they choose not to invest today, tomorrow, or Wednesday, even on speculative plays. Because you see, he might rug pull us again, because you see this like a tipping point, and then you get to this point where the Fed is for you, and then becomes in a situation comes, and then it tips, and then it turns out to be that the Fed is against you now. Now, it's not against the investor, but they have all these inflation issues that the pandemic caused, and the supply chains. We've been over this again. You guys get it. The supply chain is stuck because of all these orders that, like, people order now. They cannot catch up with production, and then everything is overwhelmed, from factories to harbors to freights to everything else. So this causes this whole shenanigan here, and then we have inflation through the roof. Now, on top of that, we have war too, okay? So now the Fed comes out, and the guy says, Jerome Powell said, hey guys, listen, now we've got to be aggressive, and now this is where investors, especially that they know what they're doing, they are becoming cautious. Because if they raise the interest rates too much, they can cause a recession. And like I said in my previous video, which if you haven't watched it, is either here or here, depends on where the card goes, it's going to be a Fed-induced recession. And there is nothing worse than that. Because the very thing, I'm going to say it again, the very thing that these guys were trying to prevent, they're now inducing it themselves. So this is a big issue. And I hope and pray it doesn't happen. But there is some, like I said, there is some fear in the market right now, and it's natural. If you're a long-term investor, do not concern yourself with what I'm telling you right now. Like, things are gonna go. This is a great decade. Things are gonna go back to the moon very soon, and I'm gonna give you a date right now. Write this down, boys and girls, ladies and gentlemen. When is everything going to the moon? I'll tell you right now. Things are going back to the moon once the Fed comes out. Take notes. Once the Fed comes out and says, guys, we are done raising interest rates. The economy is where it should be. That might be a year from now, 6 months from now, might be a year and a half from now. No more than 2 years from now. And they plan to do incremental interest rate increases, which is going to be like 0.25 or 0.5. And then they kind of like trying to, I hope you guys understand me. I don't want to confuse you, because monetary policy is a very complicated thing, right? And you don't need to know too much about it, but you need to know the very basics, which are the following. They try to kind of front load the monetary policy as well, which means now in this meeting, especially because here's the timeline, right? So up until December, which we had this euphoria in the stock market and everything was great, the Fed was like, everything is good, inflation is transitory, it's gonna go away, and then we're gonna focus on supply chain, and then unclogging that, and then things are gonna be better. And then they started slowly, they started to become a little bit more hawkish, which makes sense because, just like I said, just the Fed, just by being a little bit more aggressive with their talk, it helps to cool down the economy. That's their purpose there. That's their goal, to cool down the economy. That's why they become more hawkish. That's why they talk about these things. Now, after that, okay, so in January we saw this huge mess because they flipped completely to what they were saying, okay, because they obviously the inflation reports they were getting were through the roof. So since they flipped completely, what happens now is the following. Now, hold on. What happened now is that they start to try to control the inflation, and then because they didn't want to cause a big mess and a big shock in the markets, they chose to raise the interest rates, like we said, on March by 0.25%. So now the second FOMC meeting is knocking on our door. Tick tick. Who's there? Whatever, knock knock, actually. So knock knock, who's there? And the Fed is there. The Fed is there to raise the interest rate, and we have issues because if they try to front load the interest rates by a lot to be ahead of this thing, they're gonna collapse the whole thing. Janet Yellen, which is one of my favorite people in the world, she's smart. She did a great job at the Fed up until 2018 or wherever she was the Fed. She said that we cannot take any more surprises. So if you ask me, I was hoping for a 0.25% interest rate increase by Wednesday. I don't think we're gonna get that. Now my best case right here, it is for a 0.5% interest rate. What are the 10-year? The 10-year is at 2.9%. Okay, so that's what I saw, by the way. Let me show you. That's what I was looking at. Because if this touches 3, we haven't touched it in a while, we'll see more pain. But I hope we won't touch 3, although it's very possible. That's what's crashing the markets. If you guys are wondering, that's the fear here. It's crashing the markets. And then this is caused, like we said, by the Fed, all right? So back to me. What I was saying about Wednesday is that I think they're going to raise the interest rates by 0.5%, which I think now that's on the table. That's where they're heading. And what's unfortunate is that Jerome Powell, between March and now, like he kept a very low profile up until that meeting very recently, like a week and a half ago. So like he really rug pulled us, but I think that's all right. And the reason I say this to you is because I think they're going to be smart. And because they've been through this again, I have faith. That's why I haven't sold yet. Whatever. I felt some pain, but I made a lot of, and just like you, I guess, if you're here, you've been investing in the stock market. So you guys know, it's not always green. But if you guys invested during the pandemic, you make a ton of money. So don't be complaining if you guys are losing some now, because you made a ton if you guys invested in the right place. So that's why I'm here to talk to you about this. We've had another thing happen right here too. Let me see what I can show you. I have all these paid subscriptions, so it's easier for you to just chill here and see what I see, because I pay actually for all these online things and you guys don't have to. So, oh my God, you don't even want to know how much I pay for all these things, but it's okay because I'm here to provide value. Okay. Here is an article, for example, that doesn't say what I just told you, just because they try to be very, very clickbaity. So look at this article, okay? So I'm gonna cut to number 2 and then put myself up here. So this article says, all right, look at this. There will be no soft landing. Boo, boo, boo. Come on, man. Have you seen that? The come on, man of Joe Biden. Joe Biden said to Donald Trump, come on, man. Come on, man. Have you seen that? I hope you have. Anyway, so there will be no soft landing. Why recession is inevitable? It's not so inevitable, but things are not looking good. So gas prices, which are going up, okay, and then they say here about central bank, but if inflation sits at a 40-year-old high. Well, but this is so clickbait. Is not even funny. You got to factor in all these factors that they cause now, and and after that they're gonna talk. You see, like I made a video about it, and there you go. That's what they're saying here. Now they're gonna say about GDP, which shrunk by 1.4% from the prior quarter. So, you know what else, guys? Let me tell you one more thing. Let me bring it back to me. So they try to induce fear. That's why they say a recession is inevitable. So, which I'm not saying it isn't. Okay, this is all on the Fed's hands right now. But I told you about the negative GDP, right? On my previous video, which you should watch so you get a better idea what that means. So negative GDP, actually 2 consecutive negative GDP, negative growth, okay, quarters, Q1 and Q2 or Q2 and Q3, whatever, consecutive, means that you're in a technical recession. If this happens, which might happen because nobody knows what is going to happen, I hope it's going to be mild. But you have to understand, in real estate as well as in the stock market, there is comps. And let me tell you what are comps. You real estate people know exactly what I'm talking about. So comps are similar things to your thing. So last year's comps for every company in the world, unless you're a restaurant, but for every company that was producing a product and shipping it to people, are so high because of the free money, the free unemployment, the free this, the free that people were spending so much money last year. And people are still spending because reports show that people are still spending, not the same way, but they're still spending a lot. But so the Q4 and Q4 was Christmas anyway, so the Q4 is always very high. But let's say Q4 and Q3, all right? So Q4 and Q3, the whole year of 2021 and 2020, they were so high. So you cannot compare this kind of environment and situation to this thing that we have here. You got to understand this, okay? The comps are so high for the past year and a half, that you cannot compare the last year comps with this year comps. Unfortunately, they don't tell you this. That's my issue with all this mainstream media, which they're great. These people, they try to put food on the table for their families, make a lot of money, and power to them. And some people, they provide a lot of information, but you see, they don't tell you this. Anyway, Barnes is a great magazine. It's not a magazine, it's like a newspaper. Actually, it's a great newspaper. I love them. And they're very bullish on Tesla. So like, I would like take my money. But that's the issues we face here. So that's what they say. That's why they say it's inevitable. So a recession is inevitable because you're gonna get 2 consecutive, like I said, negative GDP. All right. So probably, let's see. What I want to tell you more is about Berkshire Hathaway Holdings. Did you see that? I hope you guys saw that. Interesting things happening, huh? So, by the way, all right, that's CNBC. I like CNBC a lot. Okay. So, do you remember? I hope you guys follow me. Let me put it as a banner here. Hold on. So, I hope you guys follow me on my socials. All right. So, here is, hold up a second. Instagram. At Alex Langes. All right, there you go. So here we go. So this is my Instagram, right? This is somewhere right here. Okay. So if you follow me here, okay, I told you that Warren Buffett seems to be loading up on financials and seems to be loading up on oil. Okay. And oil is not the best way to go as far as the environment goes, but it's one of the safest places to be now, and it has been for not for a long time, but ever since, especially the Ukraine thing happened. Okay, so he was loading up, and I told you about this, and I printed the papers because I was looking it for myself, and then I put it up there. So if you guys want to follow me there, so you don't miss real time updates, okay, not after the fact when the video is up. Follow me on Instagram, follow me on Twitter, follow me on TikTok. I love you guys. Since we're at this, smash like buttons, do whatever you have to do. We've been over this again, okay? Not your first rodeo. So I love you. And let's see. So Warren Buffett, that's what I wanted to show you. That one in, and you can see me on top. Doesn't cause any issues here. I hope so. It doesn't. You guys can see that. Okay. But by the way, days like this, let me tell you something else. Because all these rules that people tell you about, and we're gonna go a long time. It's okay. I have my coffee. Why not? Right? You wanna learn about investing, you learn about what I do investing, you learn about how we make money in the stock market. So chill with me if you guys watch this video later on. So what I wanted to tell you. If you read books, especially books that they have to do with index funds, they will tell you hold, don't worry, dollar cost average. And this is great advice, right? So I'm not trying to take this away because it's good advice, especially for people that don't want to deal with their investments at all. But if you're here, I would guess that you don't want to leave your wealth, or if it turns out to be wealth anyway, because if you wait 40 years for your 401k to turn into $1 million, trust me, you're not doing a good job with your 401k. And whoever tells you that you are, they're lying to you, okay? They're making a lot more money with your money that you put aside. Add up the money that they've taken from your 401k, and many companies are so scamish, makes me sick to my stomach, okay? And then they make it seem like so legit and uptight, and then they bring these suit people up. Anyway, so look where your money on your 401k goes. It's the biggest scam in the US, okay? And I'm not telling you there is no, you know what's a fiduciary duty? Let me tell you, a fiduciary duty is when you have a duty to put your client's interest before yourself, before your own pocket. A fiduciary interest is something that people in the financial industry, in the financial industry, I get passionate and I mix up my words. In the financial industry, swear by, but nobody follows it, you see, because they go into this Wall Street environment and then they get brainwashed. And then of course, if you can make $1 million in a year or 2 or 3, why wouldn't you scam these people out of their sweat money, right? You hungry pig in Wall Street. I hope I didn't get demonetized. That's why I had a pause, because I didn't want to say something bad. Anyway, 401k is the biggest scam in the US unless you do it. America's best 401k. This just came to my mind. I read this and I really like what they're doing. So look it up. America's best 401k, I think, is .com or something. They do a really good job, okay? And you can roll your 401k there too. But anyway, it's a scam, guys. And if you think you're not invested in the stock market, you are through your 401k. So look where your money is going. And if you put every month 100 or 200 or 300 bucks out of your paycheck or more, and you end up with $1 million at the end of your retirement or $2 million, I'm telling you, they're not doing a good job. I'm telling you. 40 years, 30 years, 25, 20 years. No, this is compounded returns. You should get a ton more money, okay? Now, the hard part is that you don't want to do this by yourself, and then you don't trust yourself with picks as well. So I get that part, but do your research a little bit. It's your money, it's your sweat. Don't make people in Wall Street rich with this big scam. So anyway, why am I telling you all these things? I was telling you these things because, you see, they tell you don't put all your eggs in one basket. Don't put all your eggs in one basket. Blah, 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 blah. Do you know how much Apple Warren Buffett has bought the past quarter alone? 600 million or something. Buffett, Berkshire Hathaway chairman and CEO, told CNBC Becky Quick his cooped up 600 million worth of Apple shares following a 3-day decline in the stock last quarter. 600 million. This brings his position about 45 to 48% or something. So the entire Berkshire Hathaway is like 50% Apple right now, or a little bit less. Do you understand this? Do you understand how they play the game on times like this? They go to their highest convictions and then they stay there and stay there and stay there, okay? And then they dollar cost average the rest, all right? That's what you should do too. Dollar cost averaging means you can dollar cost average your paycheck, just buy a little bit and then buy a little bit every time you get paid and buy a little bit regardless of what is going on in the stock market. Just buy a little bit and go to bed, forget about it, just automate it, buy a little bit. This is going to make you very rich, dollar cost averaging, okay? But in times like this, especially that you don't know what is happening tomorrow, you don't know what is happening next week, it's even more useful, okay? So yeah, dollar cost averaging is a safe bet. Now, yes, there you go. So Warren Buffett is 50% Apple. So when people tell you to diversify, they're talking about bull runs because, and I'm not telling you like hold one stock. Although I pretty much I ended up just doing Tesla and Upstart right now and SQQ. Oh, my plays now are Tesla, Upstart, and SQQ. Okay, SQQ is like shorting the market. I'm expecting to make some money by Wednesday on that. Like I said, I'm very transparent, so I don't care. And Upstart has been making these crazy moves, but if you miss it, man, I'm gonna show you right now. I'm gonna do another 10 minutes because this went longer than normal, but I love you guys and I felt like giving you a good video today because life is not easy, people, and making money is not easy. But if you understand the game, you can get better at it, and then it turns out to be easier the more you play it. So don't be scared, all right? Stay in it and keep your focus, okay? I really hope you watched my last video in the car because I really wanted to tell you in 10 minutes, I got a few good punches in there, right? So you should watch it. Anyway, other than that, let me see what else it says about Warren Buffett, and then I'll show you my plays. So Apple is conglomerate, single largest stock holding value. Oh my God, they hoard $159.1 billion worth of Apple. Look at them. By the way, these people are kicking everybody's butt, man. I wish I found this. Let me see if I can find that. They even kicking the S&P 500's butt because they played a nice bet on oil and financial, like I said. So they're doing better than the S&P 500 recently. And that's the benchmark for all the hedge fund managers, all the money managers. The benchmark is you compare to the S&P 500. And if you're beating it, you are going to get paid very well in management fees and bonuses and all this. If you're losing, you're losing clients, people call you. If you're Kathy Wood, poor Kathy. Oh my God, poor Kathy Wood. Let me show you the RK. Look at that. Okay. Guys. Look at this decline here, people. Look at that. She's down 61%. And she has other ETFs too. I don't know what the other ones are doing, but that's the first one that pops up. She's all for innovation. And like I said, I'm going to keep repeating myself because I want you guys to get a few things. So here is a repeat, okay? Markets work in cycles, okay? So because markets work in cycles, all right, if what you invest in is and is your cycle, you're going to make a ton of money. So it goes like that. I can show you here. If you miss that cycle or you have the right picks in the wrong timing, because timing, like I said, is everything, then you have to wait. If you want to keep the same thinking, which is silly, okay, do not do that. Then you have to wait until the innovation cycle comes back. And we are not in the 2020 or 2021 era anymore. We might be in a year because they're going to stop raising the interest rate. So it's making money all over again for everybody. But at some point, they will stop. I don't know it for a fact, but at some point, they'll stop raising the interest rate. So who cares? But the whole point is here. If you miss the cycle and you don't change your thinking, you're losing money like crazy. she's losing 61% of people's money, man. Come on. She has Harvard, Yale, like all these minds from like these great universities working for her doing research, and nobody tells her, Mrs. Kathy, shouldn't we change our thinking? Or even our name, because you call the ETF Innovation ETF. All right. So anyway, like I said, it's not my place to judge. I love Kathy. I've learned from Kathy. She was right about Tesla. I don't know if she's right about all the other stocks she's doing, but they're doing a lot of research on those, so I cannot tell you who's right and who's wrong. But yeah, if you don't change your thinking, like I said, that's why I have an office, by the way. That's why I like being here, because you sit down, guys, and you think where the world is going. And if you do that, you can be ahead of the game. But if you wait for data and this and that to come back, and you don't think and see and observe, I've been so passionate, it hasn't even been on me the whole time. I've been on a tiny window. So if you don't think, observe, and understand where the world is going, you got issues, because you're going to miss the train. Okay, investing is thinking. Investing is psychology. Investing is nothing more than not being caught by the knife that's going to fall, and you have to be through before the knife falls. Okay, now there is some great companies. That's the best part. Okay, but another thing is, and it's going to be one of the last things I want to tell you, it is that you have, as a person, not only as an investor, okay, which I understand if you guys don't have enough time to follow up with all this news, and you might not even want to pay for all the subscriptions to get you the news and break it down and this and that, but that's how I chose to make my money. So that's why I'm here to share it with you. And what I want to tell you and what I have found out, I hope there was no issue with the sound today too. What I want to tell you, what I have found out, is that you should shift and change and keep an open mind and be firm about things that you have to be firm, and have principles, and be firm on your principles unless your principles are proven to be wrong. But you gotta be open and elastic, to what is going on, to changing, in relationships, in the stock market, in yourself. If you wanna eat and bulk up in your health, or if you want to lose weight, you got to be elastic and change. And different areas and different roles require and demand different things from you. And if you don't change and you want to be stiff, you know what happens to stiff things? What happens to stiff things under pressure? They break. So you cannot be stiff and think that you know it all. Okay. Keep an open mind, learn from people. I love doing this, so I hope you stick here for the journey. Subscribe, smash the like button, and most importantly, hit that bell so you get a notification and you chill with me on my live streams. And I haven't even seen. Did I have any things here? Yeah. Okay, so that's all I had to tell you. It's been fun, man. It's been a fun journey. I know that the stock market is very in right now. Everybody's gonna be trying to make a lot of money. The year to do that was last year. So if you guys are in this thinking that you're gonna make a lot of money this year, find another game or go to the casino, because that's not gonna happen this year. But if you haven't lost money, or you made a tiny bit of money, then you should take it. And if you've lost money, you should take it too, because things will be better. And if you have a good equity in good positions in companies like Tesla, and like now that I said Tesla, I said I'm going to show you my picks, what I'm doing to day trade or whatever. It's you build equity. The only number that can go up is the amount of shares that you own. Forget about the money that says in your brokerage account, but the amount of shares that you own should be going up in good companies. AMD is reporting soon, huh? AMD might be, if AMD does good, then Nvidia does good too, because they're interconnected. So anyway, lastly, okay, so I don't hold you here hostage if you guys chose to spend 40 minutes with me, or however long we've been here, is this. So my picks: number one, This is short-term plays. I don't stay in this for too long. SQQ, look at that. Look how beautiful. Woof, 1 month chart. 58%. 1 month chart. 58%. This is shorting the market, FYI. It's inverse leverage 3x. So if the market goes up, this goes down 3x. If the market goes down, this goes up 3x. Okay. The issue and the problem is you cannot use leverage on that because it's already leveraged. So Robinhood and any other broker is not going to allow you to use leverage of margin on this. Okay. 58%. This means if you put $10,000 a month ago, now you'd have 16,000. I love green days or green charts that they look this way going up. So the 6-month chart, like I told you, that's why you don't stay in here too long, because you get caught somewhere here. Forget about it. This is when the stock market ran March 14, 2022. So you're going down. So this does the opposite that the QQQ does anyway. Short term, this is shorting the market. It's inverse leverage. Learn about it, understand it, and then invest in it because it's dangerous. And like I said, you lose the boat, you miss the boat, you miss the money. Upstart. Have you seen that video where I posted on Instagram again? Come on, follow me there. So I posted there and it says, so there was the guy like, and that was back in the bull run days and everything was running. And then Upstart is like we invested in Upstart and Upstart is up like 25% the past 4 days. And like the other guy is like, what does Upstart do? And the guy's like, I'm losing you. I cannot hear you. What? Like, I know Tesla, the guy goes like, I know all these other companies you invest in, but what does Upstart do as a company? The guy's like, I'm losing you. I cannot hear you. I cannot hear you. These people invest in companies and they don't even know what they do. I'm telling you, you give these people your 401k money. Look it up. Upstart, I'm losing you. Or Upstart, like fail investment, money manager, whatever, something like that. Look it up. So Upstart, it's a financial play and it's not the best play in this market, but it's a day trading thing, man. I see it every time, and sometimes I'm like, should I buy it? Should I not? So I've been buying it and making some day trades or 2-day trades on this, and but don't hold it for too long either. That's my SQQ approach here too. The only thing I hold for too long, regardless, I don't care. It's Tesla. So there's other company in the stock market that like American Express is good, and I like Charles Schwab, brokerage, all these financials that they're gonna do good during a high interest rate environment. These are good too, but nothing crazy as a return, you know. Anyway, I gotta wrap this up. Like, Alex, you went for 45 minutes. What the hell, man? What did you say all this time? So look at these runs. This is a 1-day chart. We started at 73. It ran all the way up to 78. You know what this means? This means $5 per share you could have. You buy at open, you sell 30 minutes later, $5 per share. Do you know what this means? Let me make the numbers for you. Okay. So let's say that you have to invest. You got to put big numbers to make good money. Let's say that that's what I was going to put if I was going to put it. I was going to put 50 grand. I'll show you if it focuses. So I was going to put 50 grand. Okay. And that's how you do it. 50 grand times, what was it in the morning? Let's take this, 73.80. So this gets you 50 grand times, divided by 73.80. So 50 grand divided by 73.80, you got 677 shares. This is made to focus nearby my face. So yes, 677 shares. So now, all right, we're gonna do this times what was the high? Let's say that you didn't get it right on the high, but $78. Don't be greedy. Times $78. Got 52 84, 5. So within 30, 30 minutes, 9:58 is the time. Within 30 minutes, you have made $2,800. Call it a day, made your monthly salary in like 30 minutes. Does it work like that? Did you know it's gonna go up, Alex? Of course no. Nobody does. But it's when something it has a certain pattern and you follow it up closely, you know that sooner or later it's gonna run, and it runs. It's a day trading stock. You gotta accept that. Upstart is just got it like that. Just likes to run and then crash and run and crash. And then the sad is that we broke $80. Now we're all the way to 73, which sucks. So if you bought like 3 weeks ago and you just forgot about it, you're down. But good day trading. If you can identify where the bottom is on Upstart, you're gonna make money every day. Every day. Okay. It's like, Alex, how can you say this to people? Yeah, if you can identify the bottom, that's the hard part, you're gonna make money on Upstart. So anyway, I love you guys. Food for thought, a 50-minute video. I hope you guys put this on a car or something that you have a long drive. Okay. I love you. I'll catch you very soon. Thank you for being here. Thank you for putting up with me for 50 minutes. And like I said, smash like buttons, follow me, blah, 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 or do nothing. I don't really mind if you've been here with me for 50 minutes. I love you. Thank you. Bring the sun back in Massachusetts, please. My Hawaiian blue shirt. And I'll catch you guys soon. Thank you for being here, man. It means a lot. I love this. Catch you guys on the next one, all right?